Hello everyone, it is Sterling here from Day Trading Forex Live, and I got another live video here of an entry. This is way in advance. I just wanted to get the entry and draw out what I would expect to happen. We'll see what happens, see if it plays out that way, and that's really the point of what we do. What we do is we define where we would expect the liquidity to be, where we would expect the manipulation to occur from, and then we wait for that to either confirm or deny. So what we had yesterday, and you have to draw context because again, smart money builds positions over hours, over days, depending on, and again, I'm doing overgeneralizations here, but that's the point. A position is built rather than entered. Therefore, you have to see, and you do see, this type of false push before continuation. So the one thing that we saw first, now I'll go out to a 15-minute chart, but yesterday, and I traded the euro yen on this. This was actually a setup that I had posted. Actually, I'm not sure if I did this video yet, but I had got an entry on the euro yen, which was a backside short from right here, and we took that short down for a 2-to-1 reward to risk entry. Nice trade. I didn't catch any of this move down, but I did catch my 2-to-1 trade there. I have a video on that. I don't know if I put that out yet. If not, you'll see that here shortly. But anyways, what I talk about in that video is this type of reversal where you make such an aggressive move in the early part of the New York session where it's much larger than anything else around it, and then you make the surge back down. And it's really the same thing on the pound yen. The pound yen, this is again a 15-minute chart, so a little bit wider than what we'll go to, but it had this really aggressive push up followed by that snap back down, and here's the key: complete retracement and then some. I mean, it completely retraced the New York session move and then some. And the euro yen just looked a little bit cleaner on the initial setup, but that tells us something. It tells us something, especially when it confirms that move with further downside. It tells us that they were selling through that move. If smart money as a whole was not selling through this price action through here, you would not have seen the price rapidly decline at that rate and stay down for that extended period of time. So the one thing that I know about that is if they were selling here, they're likely to continue selling. Now, a really aggressive trade, or a little bit more aggressive trade, I should say, would be just blindly entering as you come back into the middle of this range. The higher the entry, the better would be in that situation. Not really an entry I take, though, because it's very discretionary. So, again, it's not really an entry I take. Could you? Yeah, but I think you'd require a lot more rules around it. Again, not an entry I take. So what I look for is I'll look for another confirmation to signal that trade. So what I'll do is I'll look for another stop run to confirm that trade. Now, yesterday we had the stop run. We took a trade off of that. It was on the euro yen, but I need to see it again today just to confirm that that is in fact what's happening. So if they're going to continue the market, if they're going to continue to drive the market down, what are they going to do before they drive the market down? The one thing that we know about smart money is if they want to sell the market, they need buying pressure. For you and I as retail traders, this isn't something we focus on because when we click buy or sell, our positions are filled immediately. Even if you're filling what would be a large retail position, 10, 20, 30, 40 lots, you're going to see an instant fill, especially when you're dealing with the majors. And we just don't have to deal with that type of, with slippage, with those type of issues that large positions do. So if they want to accumulate or enter a short position, continue to enter that short position in expectation of a larger move down, then they're going to drive the market into buying pressure. They're going to induce buying pressure, and by inducing that buying pressure, they're going to sell into the buying pressure that's induced, thus allowing them to sell at a higher price. So where would they do that? Well, the first thing that comes into mind here is that think about, for example, if you put 100 traders in a room. Okay, you stick 100 traders in a room. Some of them are going to understand indicators, different kinds of indicators. Some of them will trade Gartley patterns, chart patterns, trend lines, triangles, MACD cross, moving average cross. You know, just, I mean, you could list 1,000 things. But there's one thing that every one of them is going to have at least some familiarity with. And there's one thing that's going to be more pervasive among all their strategies than anything else. And that is basic support and resistance, basic previous turning points in the market. And if you look at what is a commonly used strategy, above all else, nothing will have more usage across all different kinds of strategies. Even when people trade with EAs, indicators, they generally use some type of previous support and resistance as a way to take profits, as a way to place stops. it infiltrates almost all strategies, even if the strategy is not basic support and resistance based. Because of that, nothing condenses liquidity like a previous turning point in the market. Therefore, if smart money wants to induce the buying pressure by driving it past these highs, that's exactly what you're going to do. Why will it do that? The reason it'll do that is because think about if you were short anywhere through this price action right here. Imagine through the Asian session all the way through the start of the European session right here at the end of Asia. That's 2 a.m. Eastern time, 7 a.m. in the UK. So an hour before the European start, and then you have a couple more hours. So anybody that's short through that, anybody that's getting short on a retest of that level, where do you think their stops are going? Good question, right? So when you think about it from that perspective, that gives you a little glimpse into how you can start to identify areas of liquidity. So with that basic standpoint, if you're talking about the short-term side of the market, meaning day traders, and the short side of the short-term traders, because at any point in the market, there's always those that are long biased, there's always those that are short biased. Therefore, the short bias side of the market, anybody that was short on the pound through this period of time, or anywhere through this period of time, is officially underwater if that high starts to break. Therefore, you'll see positions getting closed out. If you close a short position, you have to buy it back. If you're looking to get long on a breakout, you're buying the market again. So as you can see, it induces buying pressure on a break through those highs, thus allowing them a great time to sell into the market. So what I want to see happen now, again, as a secondary and additional confirmation, is I want to see another failure. We've seen the market drive past these highs. Now I want them to show me that that was indeed a false push. So what I'll look for is I'll look for the first failure point. And all that means is I'm looking for the first point at which we start a succession of lower lows and lower highs, because we have been pressing to the upside. So the last low we have is right here. Therefore, I will deem that as the failure point. So if we break through it and then we come into the backside of it, I will be taking the entry right there as a first touch. So I can almost tell you right now, prior to this dropping, now it's got to drop through there a bit first, but right now I'll tell you my entry will be going at 38, 148.38, just a little bit shy of that number. We'll see what happens. Drawing this out well in advance, so there's a lot that has to happen in order for that to come about. I'll come back for the update to this trade here shortly. All right, guys, so I'm coming back for the entry part of this. Played out exactly as I drew it out way over here. It did take a bit longer for it to come about, and it had a little bit larger push down before coming back into the level. But either way, the principle of what we drew out came together exactly as we were looking for, and we're looking to take the entry on the first touch as we come back into that level. So given the increase in volatility and range we've seen, I'm going to go with the 20 pip stop and a 40 pip take profit on this. That's relatively easy to do when you're considering that the ADR in this pair is 138. All right, so there's the entry, and I'll be back for the conclusion of this trade. Again, 20 pip stop, 40 pip take profit. It puts our take profit at roughly the 147.98 level with an entry of 148.38 roughly. So relatively easy to do when you consider it's somewhere in this area. We've been well below that level already today, so even a retest of the lows would get us well beyond where our take profit is. All right, guys, it is October 15th, 2018. I'm coming back for the conclusion to this video that we had on this pound yen short going back to October 11th. Now, as you can see here, what we had was basically it was a backside test. We were talking about coming into the backside, as we've discussed in this video already, with an entry of around the 37-38 area. You hit a max take profit somewhere in the 35-36 pip area, which means you're well over the point at which we move to break even, which is right around that 60% of the take profit area. You're only a couple pips away from hitting a full take profit, so obviously well past that point. It's unfortunate, this is a great example, though. It was a great example of how you can identify entries long in advance. That's why I still wanted to post this trade. I had forgot about the video, and I realized that I'd still forgotten about the video. It's kind of a good opportunity to not only close this up, but also talk about a future movement coming. So not only just giving you guys information in the past, but maybe some useful information moving forward. And that is where the pound yen, or what the pound yen is doing right now. So Somebody left it in a comment, was asking me to do this. So if you guys have questions, things you want covered, leave it in comments, and I might just throw it up in a video. So anyways, what we have here on the pound yen is we've finally come out of this range that we've been holding for quite a while. Here's the hourly chart. I'm not really trying to show you anything specifically. Actually, let's go to the 4 hour so I can zoom in a little bit. I'm not trying to show you anything specific other than the fact that you've had this multi-week range that you've finally broken out of. So I'm going to trust that this is going to hold just based on the fact that we've held once. So what I'm going to do is, until proven otherwise, I'm expecting this move to hold. I would be expecting this move to hold, which means, you know, what are the levels that we're looking at as far as potential manipulation points? The one point I'd really look at here today going into the Asian session is 147.36. And then above that, if we continue back up, if you're going to continue back to the upside, the next point that I think is really a decent option is all the way up here around the 147.96 level. And I'll just go pinpoint that level because we actually have to drag it down. I forgot about that earlier break. So for me, I'd round this up to 88 because I go as close as I can to the candle body without going into it. And I go to the nearest pip. So again, that would be 147.88 for me. And that would be the next point I would look to the upside on the pound yen for a continuation down. Now, we could have more of the discretionary based entry, which is really what we started discussing in the first place, and that can happen anywhere in this zone. But what I prefer even for those entries is that they occur around listed manipulation points. Can it occur in no man's land? Well, yeah, it can. It just strengthens my belief in the setup, especially when it's occurring around a manipulation point. Even if you guys understand the confirmation entry, or for those of you that do, even when you have two candles that consecutively open and close beyond your level, you might not be able to get a confirming entry off that, but that's what this other discretionary entry does. It gives you another option. Gives you another option when you do go past a level maybe a bit further, so you're not going to get a confirmation entry, but it'll still give you a potential entry at the more discretionary based setup that we discussed in this video here. So I'll hurry up, get this thing posted so it's useful for you guys going into October 16th. I don't personally start trading until 2 a.m. and I wouldn't look for stop runs prior to that point either, so I'll have it well posted prior to that. I hope you guys enjoy the video. Again, if you have any questions, shoot me an email, support@daytradingforexlive.com or daytradingforexlive@gmail.com. You can also check out daytradingforexlive.com, the site. Plenty of info on the site, tons of videos, tons of articles. Also, if you want to look into the bank trading course, what's included in the course, the live room, the members forum, the chat service in the forum, and everything else associated with that, you can do so as well from the site. And finally, you can also hit the contact page and send us an email directly from the contact page as well, if that's a little bit easier option for you. If you're watching this video on YouTube, let me know what you think. Leave a comment below. I'd be happy to get back with you with any questions you have as well here on this platform, and be sure to subscribe. Until next time, guys, happy trading.